Good afternoon. This is Mike Durr, Kingwood Mortgage Guy, and Joe Salas and I, Real Estate Guru. All right, you put it on there.
I should put an asterisk, self-proclaimed.
Self-proclaimed. That's right. We are here today to just talk a brief time about what's going on in the real estate market, the lending market, the credit market, the house appreciation craziness that's going on. So if you want to hang with us for 15 or 20 minutes, I think we're going to give you some valid input today. So Joe, talk to me. Welcome these guys, and what you got for me today?
Mike, been busy, my man. Been busy, but I'm glad to be here. Glad to share my knowledge. Today, actually just got off a call with a client that, I helped him buy a house. I was on the buy side doing real estate sales, and they had hired some contractors to come in after the fact and do some work to the house. Brand new house, by the way. They called me today, um, asking me for advice, and as much as I would like to help, some of this stuff that they ask, or that even some of my other clients ask, goes into the realm of legal advice. So, um, everything that we say on here, of course, you should be protecting yourself as the home buyer out there, as the person that is procuring property. Use our advice, but sometimes it's beyond what we can offer, as far, even I would imagine with you in regards to mortgage, and me in regards to real estate. So, to sum up what had happened, they had a contractor that came out and did some work. The work was subpar, was not, and even in my opinion, and being an inspector and in real estate for, oh gosh, almost 8 years now, yeah, they were right. They had a reason to be upset. The issue was that they paid him complete before. Yeah, exactly. They paid him complete before, coming to agreement that the work was complete, which it still isn't, and that it was done satisfactorily. So, that's kind of what I wanted to talk about today. And what about you? What you got going on?
Well, I put something together, and it's based on something that happened to me this last week, and it's about getting the best mortgage deal you can. And I went out and had something happen to me that I don't want to happen to anybody else. And it was kind of a bait and switch type thing. But the premise of the little presentation I'm going to put together is about how to get the best rates. And when I say that, I want to take a minute and say the best rate or the best deal. And there's a combination of those two different things. So that's what we're going to talk about. And I'll go ahead and get my slide up here. We're going to add it to here. And yeah, I think we're in a good spot here. So better credit, better home. Some people might even ask, and I had some people ask, what the heck is that? Well, I consider myself a credit expert in regards to scores. Okay. I've been doing this for 25 years. We've worked and seen how the algorithms work. And I can tell you that if you have a better credit, you're going to get a better rate. That means you're going to be able to buy a bigger or better home. That's one of the premises, and that's where Joe comes in. Joe is an inspector, and he's a realtor, and he knows how and what a better home looks like. And just because a home is more expensive doesn't mean it's a better home. It could be a bigger problem, is what it could be. So that was kind of the premise of that. This part is how to find the cheapest mortgage. Now, again, you got to be careful when you're looking for the cheapest anything, but the summary of this, and this is what we're going to cover, is we're going to tell you that one thing you do when you're looking for the cheapest mortgage, you raise your credit score. That's one of it's a standard. You're also going to get your finances in order. Get your finances in order. And so, what does that mean? We'll talk a little bit about that. Save for a big down payment. The bigger down payment, the better chance you're going to get the better rate. It takes the risk away from the investors. Get quotes from 3 to 5 lenders. Joe, don't ever let me say that again. No, I'm teasing. That is an important thing to do. It's something that I'm an advocate for. And don't get me wrong, I'd love to have your business and you only shop with me, but it's only prudent for you to get other quotes. And I think it helps somebody like myself stand out, and we definitely win our share.
And you mentioned in a call, probably 2 or 3 calls ago where we were online doing this, you mentioned something about there's a misunderstanding about credit being reviewed by mortgage people. If it's already been reviewed, what was it, Mike? You said within 45 days.
That's right. Yeah,
It doesn't affect the credit. Is that right?
That's right. You've got 45 days after that first pull by a mortgage company to go and have your credit pulled 100 times. Now, you don't want to have it pulled 100 times, but that it does not affect your score. And that's an important thing. The other thing that we talked about, again, is that if you get a quote, I'd like to be one of the guys that gives you one. Okay, I'd like to be able to compete. So that's obviously one thing that I don't fear that. So the getting the quotes from multiple people, that's always a good thing. Lock rate. This is in an environment where the interest rate is consistently rising. You want to lock early. And guess what? Just because you lock with one company early doesn't necessarily mean you're stuck with them. The other thing, we've got a kind of a cool program going on, what's called a lock and shop. And this is a long-term rate strategy. Like, here's an example. There are some people that out there, they're anxious to buy a house. They're ready to pull the trigger in 2 weeks to 3 weeks, right? But what's the reality? Are they able to win a house in that period that they like? I'd say slim chance, right?
Yeah, unless they're using me as their realtor. No, I'm just joking. Yeah. Even with me, it's a competitive market out there right now. Multiple offers.
We've had people in our pipelines that are pre-qualified for the last 3 or 4 months, and they've consistently been out there looking, and it just, the right house hadn't come up, or they didn't get in the right bidding, whatever. I mean, they just didn't win. So this lock and shop allows you, and boy, I tell you, if anybody had done this in January, they would be very happy about locking at January interest rates and then closing in March or April. That would have been a big win. So
is that something that you offer, that service? Is that right?
That's correct. Yeah, lock and shop is one of the things that we do, and it's saved a lot of people money. Now, I'll be honest with you, I was late to the party as far as offering this, but it's been a product out there for some time. Next two things: weigh pros and cons of buying points. I mean, some people will argue for points, some will argue against them. I'll just go through a real simple. At least the way I do it. And then the other thing is apply for shorter term. You can apply for a shorter term. The term of the loan is shorter. As the term gets shorter, the rates get better. Right? So that's what we're going to talk about. Let's go here. Credit score. So no matter where your credit score is, unless it's in the 740 plus range, it needs to get better for you to have a better interest rate. And there are a ton of tools and strategies that you can use to get your credit score higher. So if you're at 719, dude, you've got some work to do. If you're at 680, work to do. And what it does is it just provides a bigger options or more options with loan programs and things that you're going to qualify for that's going to help you during this process. So if you got the time, I mean, you need to take it. You need to talk to somebody that knows what they're doing that can guide you on this stuff.
Last time we got together, Mike, we were talking about this as well. And guess what I did?
What'd you do? Do you go get my FICO?
I paid down some of my balances on my credit cards.
Oh, perfect.
And also increased some of the limits on my credit card. So that way I'm below the, at least on one of them below a 50% mark. The others I paid down to where I'm less than 10% balance on them. That way, my credit score has risen because of that. So, if there's means to do that, highly recommend taking your advice and do that.
Yeah, it's a simple process. A lot of people just don't know it. And I've been on that horn for a long time, but it works. And let me tell you, there's no downside to having better credit scores. That is the truth. Well, the next thing they talk about is getting your finances in order. And Joe, when I tell that to somebody, what do you mean? What is getting my finances in order?
I thought you were going to tell me.
I am.
Well, in my mind, just understanding what debts you have monthly,
Yeah, knowing where
income
all
you
your
have.
stuff is,
Yeah.
having your stuff together, knowing that you've got X number of dollars in
Yep.
savings and you've got access to those accounts,
Yep.
knowing that you have access to your tax returns and you know how much money you've been earning, knowing about where your W-2s are and your paycheck stubs and your bank statements, and just having a very solid sense of where your stuff is. And you'll be surprised. There are a ton of people that if you ask them to come up with a W-2 from 2021, let alone 2020, they kind of get a pale, glossy-eyed look on their face going, oh man, I have no idea where that stuff is. And I have talked and done a little class on just getting a little box. I think I actually have my box here. It looks like that. Simple box, little file cabinet. That's all it takes right there, is a little getting your act together. So when we're talking about getting your finances together, that's really what we're talking about, is just having your stuff at hand and
Yeah.
not it being a major mystery for you. So good idea. The next one is saving for the big money, saving for your down payment. Now, in this case, I use these jars because obviously you want to save for retirement. You want to save for any vacations you might get to take. If you got kiddos, or for yourself, you might be saving for college. But just the process of actually allocating some of the money that you get paid to these different buckets is a very positive thing. And obviously that would make, and why would a bigger down payment make a difference? Well, it takes the risk away from the investor or the lender. The more money you put down means the more committed you are to that house. Get quotes. So here's an example, and I'm going to tell you what happened. One of the couples took my advice, and they got multiple quotes. I think that the realtor that was involved in this is one that works at your entity, Joe, Jane Bird Properties, and she sends out, or she sends her potential buyers to 3 or 4 different people, and I happen to be one of them. And I mean, we're consistently very aggressive. Our pricing's good, our fees are good, and we're able to explain a lot of stuff. And so she was getting ready to go under contract, and she indicated to me that she was going with somebody else. And I went, okay, well, gosh, I hate that, but can you tell me why? And she goes, well, their rate was better. So I looked at and she was kind enough to send me over the quote. Well, I looked at the rate and the quote, and they were paying a full discount point. This was a $450,000 house. They paid a discount point, which was $4,275, and the rate was the same as mine. It didn't have a discount point.
Yep.
The key part, though, the way the fees kind of came about, they did something very simply with the taxes and insurance. And the way I quoted the taxes and insurance, and I don't quote the taxes and insurance, it's really important. If you're listening to this, I have nothing to do with your taxes. I have nothing to do with your homeowner's insurance. Those are the taxes to the Harris County Appraisal District, or whatever appraisal district you're in, and or you get to shop for your own homeowner's insurance. But the numbers I put to give them an idea on how much money they would bring, I don't generally estimate those low, because I would rather somebody be pleasantly surprised at the end, as opposed to kind of lowballing those numbers to make it look better than it really is. Well, I was the only one that felt that way. And the guy that I was quoting against put his taxes in at half the amount, the mortgage insurance at half the amount of what the rates are. And so when she looked at her payment, the borrower was looking at her payment, my payment was several $100s more expensive, not because of the interest rate, not because of the closing fees, but because of the tax and insurance escrows that were different. And anyway, so she went that way. And I mean, at some point in time, that's going to come back, because they're not going to be happy at the end. But it's just, anyway, that's
the devil is in the details, Mike. The devil is in the details, and if they don't pay attention to the details, there are people that are competitive to get your business, and they don't protect you and have the best in mind for you. And I can't say that specifically about this situation, but I've seen it in the past where they may have, a mortgage provider may have a better rate. Well, same deal. I always recommend to my buyers to compare. and I recommend and refer, in the past, mortgage brokers out there that can help facilitate an analysis of that, and come to find out they're only better in their rates because they do have, let's just say, different math.
Yeah, that's right.
Or they're paying down points, and they weren't aware of that. So yeah, absolutely.
Yeah, in this particular case, the points weren't real obvious, and so they were just kind of shuffled in there. And to be honest with you, I look at it as my problem because I should have been able to explain that to him since she sent it to me. But anyway, those are my sour grapes, but I'm going to go on from it. I'll live through it. But get quotes and make sure that they can explain all the numbers there in there. That's a key thing. This one is the one about locking the interest rate. There's a couple different ways that people do this, and I like to be on the more aggressive side, a little more enthusiastic about getting the rates locked because I want you to have the best rate. But some people will say you can't lock a rate until you have a house. Some people say you can't lock a rate until you have a contract. And what I say is, if you've got an address on a property that you're going to go under contract, I'm going to be locking it. Okay. I don't know if I should say that on public.
How long can a buyer working with a mortgage provider as yourself lock a rate for?
Well, you can lock it for as short as 15 days, 30 days is standard, 45 days, 60, and 90.
And is there an associated cost with that?
There's no cost to locking a rate. If somebody charges you for locking a rate, then you got a problem there. Now, if you're locking anything over a 90-day lock, what happens is the rates that you lock, you can't lock the same rate for 30 days as you could for 90 days. There would be a cost to that, or the interest rate would be higher as you lock that higher rate. Just the lenders are going to protect themselves like that. But that's a good question. If they do charge a lock fee, it's because some extended version in the world I live in. All right, consider buying points. Well, this is a real, people argue about this, whether it's a good idea or a bad idea. And I just simply use the simple math. And an example is it costs about 1 point, 1% of, and when we talk about 1%, we're talking about if a house is a $400,000 house, 1 point is $4,000. Okay, so for me to get a quarter better interest rate on a $400,000 house, then that rate would go from 4% to 3.75. That's that 0.25% savings that we would have, right? So in that math and the savings, keep in mind you just spent $4,000. I'll do a little math for you real quick. 400,000 loan amount, 4% interest, 30-year term payment. 1909 is the first number. I'm going to put 1909, and then I'm going to do the same thing for a 400,000 loan amount, 3.75 interest rate, 30-year term, and the payment is $1,852. The math I go 48, $57.
57, yeah.
Yeah, $57. Now you divide that, and that last step is you just spent $4,000 to save 57. That means you're going to be in that loan 70 months or just under 6 years to get your money back. It's a you have to say, okay, is that the best use of that $4,000? And in the world I live in, I don't think it is. And usually when we lock rates, we look and see if there is a portion of a discount point that's worth buying. So just be aware that's the simple math there. And if you wanted to find out more about that, you can call me. It happens to be my phone.
No, I love it. I love that kind of stuff, Mike. That's invaluable right there. And really, if you think about it, on average, a buyer is going to own a house, and this is an average, national average, between 7 to 10 years.
Yeah.
And so if they're paying $4,000 for what would you just say 6 years it doesn't necessarily make sense. I agree with you.
Yeah, it's not a financial strategy. I think a lot of people would get real solid behind, but some do, and if you're gonna live in that house for 30 years, then it might be worth
Yeah.
it. But the ones that make sense, when you can get that money, like you can buy a quarter down and it costs you, it's only on there 2 years or 2.5 years, something like that. Then you go, that might be good use of that money. One other time when you buy points is when somebody else is paying for them. And a lot of times you'll get a credit from the seller for whatever you need, closing cost or whatever, and getting somebody else to pay for those points is obviously well worth it in many cases, particularly if you don't have anywhere else to spend it. So points are always an interesting question. All right, so this one's about the term on the loan, and what happens is a 30-year loan, and they're right now talking about 40-year terms. Have you heard that, Joe?
I haven't heard 40.
That 40 is out there. We think that within the next month, maybe 45 to 60 days, there'll be 40-year mortgages.
Oh my God.
And it's pretty crazy to think of. And when I think of a 40-year mortgage, I think of really it's almost an interest-only loan where you're hardly paying. I mean, on a 30-year, you're hardly paying any principal on the property. But they're kind of feeling forced to do that to make homes affordable so that people can debt ratio on those things.
Well, it's kind of like what they did with cars, right?
That's right.
You got the 4-year loans, but now you got 8-year loans.
Yeah, I mean, it's ridiculous. Of course, when cars cost as much as some houses used to, you almost have to do that.
I'm for a car right now, so believe me, I know, and I'm not going to do an 8-year loan at all.
Yeah, I'm not an advocate of those longer terms, but I mean, you got to do, if you can get in a house, guess what? It might be still the way that homes are still appreciating. It could be a really, it might be something you think about. I just want to throw that out there. And Joe, guess what? I got a contract on my house this weekend.
Oh, congrats.
So I'm excited about that.
Yeah, awesome.
So that was it. We put it on Thursday, and I got the contract on Sunday evening, and I'm very pleased with how that went down.
Right on. You got to send me some pictures of the work you did.
Yeah, I will absolutely do that. All right. And you know what? I think that is all that I put in this presentation of different ways that you can save money. I think I added enough extras junk to get me through it. But anyway, Joe, anything you'd like to add to anything we talked about so far today?
So better credit, better homes. And back to how I started out, I got a call from a client and they were pretty upset about the quality of work that was done. And, there's not much you can do post haste. Pop quiz, Mike. Are electricians required to have licenses?
I would think so.
Masters are, yeah. Plumbers, same deal, right?
Absolutely,
HVAC providers, same deal. They're all state licensed, at least the master electrician and the masters that hold those licenses are. Another pop quiz. Are general contractors required to have a license in the state of Texas?
I don't think so.
They aren't. So your roofers, your concrete guys, your fence guys, none of these people need to have licensing. And, it's one of those things where you would hope they hire professionals to complete work, and you would hope they have the knowledge of, when I talk about licensure, that to me is knowledge of what to do to minimum standards. And this is where I've lived my life for the last 8 plus years, is the knowledge of what is the minimum standard. And when we're referring to that in construction, that is what they call the code, the applicable codes, right? The International Residential Code. So, unfortunately, I come across this in my line of work time and time again, where the homeowner puts the trust into the contractor to complete the work properly to some sort of minimum standard. Well, guess what? If they're not licensed, not only do they not know about the minimum standard, but in most cases, they don't care about the minimum standard.
That's right.
And if you've already paid them the money that y'all had agreed upon, as the homeowner and the contractor completing the work, if you've already paid them the money and you hire somebody like me post haste, or you contact me as a previous client post haste, there's not much you can do. So my recommendation and the point of all of this is, when you're thinking about, you cover the better credit part of things. Me I have the knowledge to help you find, buy, and make a better home in what you are out there doing. And so part of the services that I offer in my inspection business is what I call code inspections. Code inspections, think of it as I will be your eyes, ears, and knowledge to make sure that the contractors that are hired on your job complete it to what is defined as the minimum standard per the code. Okay, like I said, I come across this time and time again, especially doing these. Long story short, but the Woodlands doesn't have a building official office. Building officials do a certain amount of that review, and if you're in a territory or a city where they have a building official office, they'll send their code inspectors out. To a certain degree, they protect you, but mostly they're protecting the city because they work for the city, right? Even if there's code officials and code enforcement out there, it's still a good idea to hire somebody with my knowledge, anybody out there that is licensed to be a building inspector and also licensed to be an inspector of these different areas and systems that are involved in the house. Unfortunately, that's not always the case. And by the time I get out there to clear, like for instance in the Woodlands, I'm involved with clearing it for the standards as the Woodlands defines. But when I get out there, the work is a lot of times complete already, and I have to be the bearer of bad news to the to my client, who I had nothing to do with the project other than coming to make sure it stamps off, and it doesn't. And their client, not only this guy that called me today, but a client a few weeks back, $35,000 for a patio cover.
Wow.
Okay. It wasn't right.
That's tough.
It wasn't right.
I was just thinking on construction loans, and I don't do construction loans anymore, but on the construction loans, on every phase of the construction, they have an inspector go out there and look at what the inspector did on the previous deal before he gets any more money to do the next deal.
Yeah, those are called draw. Those are called draw inspections. They're not as intricate, they don't go as deep into the proper construction techniques and proper installation techniques, etc. I've done those, and I still offer those draw inspections. Mostly, we're looking for a level of completeness.
Yeah, that's exactly right.
But protect yourself as a home buyer, as a homeowner. Get somebody on your side to make sure that the work is being completed correctly and completely to protect your investment in your home. And I'm talking about remodeling kitchens, remodeling bathrooms, pouring concrete in the backyard, doing fences. Even though there's not a code for proper fence building, guess what? If you have a pool in your backyard, there is a code on proper pool safety barriers. And I get this all the time. I do $75 inspections in the Woodlands for just fence inspections. And, does the gate open away from the fence? Does it self-close? Is the latch high enough? Are the horizontal members on the right side? And a lot of times they aren't. And guess what? They've already paid the fence contractor who wasn't licensed and didn't have knowledge of the code. And I go out there, charge them $75 and tell them it's wrong and say, call me when it's right. So.
Well, the crazy part about that's an insurance thing that they are protecting themselves by using somebody like yourself.
That's what I tell them. I said, the code is around, and when I say code, this is the residential construction code. It's around for, in my opinion, because either they found a better way to do something, they found a better way to install something, construct something, or somebody got hurt or died, right? For those pool safety barrier type inspections, it's mostly the latter, right? Somebody either got hurt or died, and it's designed to keep kids and animals out of your yard. But aside from the small fence inspections, protect your interests if you're doing larger remodeling construction, even if it's not required by the city. Protect your interest in your investment, so that way it won't come back to haunt you in the future.
So I want to ask you this question just to help people, and I know the answer to it, and I know you do too, but on that scenario where a contractor comes out and says, look, I need all the money before I start, how does that work? Share with people, if you haven't heard this before, you're doing your first construction project at your house, how much money should you give them to get started?
Well, I can't tell people what to do, and really I can't get involved with the legalities of the contract. But in my opinion, I would say, 25% up front, get to a certain level of completion, another 50%. So now you're 75% in, get to the final level of completion, and then 25% at the very end. That's what I would say is a reasonable on bigger projects. Now, if you're building a fence, there might be another pay schedule, but the more you can hold back from a contractor, in my opinion, the more reliable they're going to be, and the quality of their work will show, because they don't have this sum of money that they can just take off from.
That's right. The
Not worry about you.
quicker the job gets done too.
Yeah.
Now I'm thinking the material cost. I mean, their work is their skill. I don't mind buying the materials up front. That's kind of the way I do it. I'll buy the materials if it's paint, if it's wood, if it's whatever it is. Yeah, I'm good for that. But you don't get another dime until that job's finished in the way that we're satisfied with. So
Absolutely.
Just FYI on that. All right. Well, I think that we have chewed up the 30 minutes that we've kind of allotted for ourselves. I want to thank you so much for being on today. A lot of great information. I'll tell people that are listening to this or watching that this may not be for information for you, but you may know somebody that this would be really good information for. So I encourage you to pass this on, share us. Love to see some likes on there. Again, thank you for watching. And Joe, we'll catch you next week, buddy.
See you, man. Bye.
All right.